Well, it's been an absolutely rough couple days, a week or so in the markets. I got liquidated the other day on a loan I had at Celsius. And my thoughts go out to anybody who was investing in Luna over the past couple months and experienced pretty much 100% losses over the past couple days. But as rough as it's been, I think these are the kind of learning experiences we need as cryptocurrency investors so that we can better manage our risk moving forward. It's painful right now, but I definitely learned some lessons and I needed a little bit of a wake-up call on some of my strategies. And that's kind of what I want to talk about in today's video. So in this video, I'm going to talk about two of the main mistakes I've made over the past couple months in crypto, namely using too much leverage and getting a little too greedy with my investments. Then I'm going to walk you through what I'm doing to fix these issues moving forward so that I don't experience this kind of loss or stress again, as well as my strategy moving forward for investing in cryptocurrency in general. The markets are down, so views on my channel are a little bit down. This one might just be for the hardcore fans out there, and I appreciate you guys who continue to watch every week. This might not be a super exciting video, but maybe there will be some helpful experiences from myself that you guys can learn from, and that's really the goal of this whole thing, is just to share my experience and prevent somebody else from making my same mistakes. So let's take a look and let's get started. So as I said, mistake number one was using too much leverage in this market. I was definitely getting a little too comfortable taking out loans against my crypto, and that's what led me to get liquidated this last week. And I'll show you those exact details here in a minute. If you haven't seen my previous videos on borrowing against your crypto, I've done them a few times, namely this one right here, where I discuss taking out loans against your crypto during market dips. So that way you kind of limit some of the risk because the price has already dropped. Then you're borrowing against your assets. You're using that cash to buy more assets. So that way when the market recovers, you make higher returns because you can sell off some of those extra coins that you were able to buy with leverage, pay up back your loan, and then keep a little bit of profit on top. And with the strategy I was using, I thought I was very safe. You can see right here the kind of values for the loans that I was taking out. The first part was using a low loan to value ratio, or LTV. And this means you're taking out a smaller amount of cash in proportion to the assets you're using as collateral for the loan. So with $100 of crypto assets, I was only taking out $25 of stable coins for the loan. And there were two reasons for me doing this. The first was that on the Celsius network app, when you do this with a 25% LTV, you only pay 1% interest on your loan value. And this just means the cost of borrowing is super low. So you don't have to make a huge return on those borrowed funds in order to make this all worth it. And the other key reason that I use these low LTV ratios is that they have very low margin call levels. So the biggest risk of taking out a loan is that if the collateral you put against the loan drops in value, they will margin call you and say you either have to add more collateral to continue backing up the loan that you took out, or they will sell your collateral to make up for the price difference that has kind of been created as a result of the market price movements. The major flaw I had with this strategy is that I was thinking these dips to 40,000, 36,000 were going to be the low dips. So in the past couple of weeks, when we dipped below 35, below 30, even as low as like 25, 26,000, I thought those prices were never going to happen when I took out these loans. So that was a huge wake-up call for me when these Bitcoin prices started dropping lower and lower, and I'm seeing my margin call level get closer and closer to the current Bitcoin price. But perhaps the scarier part is that you can also borrow against altcoins on Celsius, which I did with the Celsius Network Sell token. So as you can see here, again, I was thinking, let me extend this time frame a little bit. I had been buying around $4, $3. When it dipped under $3, I was like, oh, this is about as low as it's going to get. I was taking out loans there, thinking there was no way it would ever dip below $2 or even $1. And sure enough, over the past couple of weeks, it did just that. But again, I was using what I thought was a safe borrowing strategy. I was using 25% LTV ratios. I was only paying 1% interest. Actually, in this case, on the Celsius token, I was paying 0.1% interest, which was practically free. But then this price drop really shattered my whole strategy. So I took out a total of about $2,000 in loans against the Celsius Network token, all when the Celsius token was about $3. So when I go to my loan details, you can see I had 3 loans liquidated. So what happens is when I took out the loan initially, it started with a 25% LTV. So when I took out a $750 loan value, I was locking up, that makes it $3,000 of collateral with the Cell token. And this is all great until that collateral value starts to drop, because at 65%, you get the first margin call. And to satisfy this margin call, you either have to pay back that initial loan value of $750, or you have to add more collateral to bring your LTV ratio back to 25% LTV. So in this case, my $3,000 had dropped to about $1,000 when I first got this margin call. And that meant I needed to add about another $2,000 to get myself back to this 25% LTV ratio. And that's not too bad, but this is where it gets a little scary because you only have 24 hours to do this. Now, I was able to contact the Celsius loans team and get them to extend this time frame for me by 48 hours. So I really had 72 hours, which was plenty of time to be able to move assets and satisfy the loan requirements of either purchasing more Cell token to back this up or just paying off the initial loan value, which was my plan. But again, the problem was here I had, if you check this out, I had 3 loans getting margin called at the same time. So I had about $1,800 worth of loan value that I needed to back up, add collateral to, or pay off. And this was all happening right here when it hit around $1, which again, I thought would probably be about the lowest it went. Unfortunately, that $1 point wasn't the bottom of the Cell token drop, and that's where this gets a little scarier. Because if your LTV drops all the way to 80%, or rises to 80%, I guess, because the collateral fell so much, they will automatically liquidate you, no matter whether you're planning on closing the loan, adding collateral, or what. If it sits at this point too long, you're just automatically going to get liquidated. And that's not really in anybody's control. That's purely to protect, the Celsius company, the rest of the Celsius kind of operations and all that stuff. And that's purely just a risk you take on knowingly when you enter the loan, which is just something I never thought would be a reality for me. So even though I was going to solve these loans within 24 hours and remedy everything to pay back those $750 balances, or about $1,800 total, the Cell token continued to drop here that next day. And when that happened, I reached that 80% LTV ratio, at which point it didn't matter if I was going to pay it off, it had to be automatically liquidated. And then when that liquidation happens, they're going to sell enough of your collateral to cover that initial loan value. So again, I started with this $3,000 in collateral, and this is just for the $750 loan. So you can imagine I did this, it was like 2.5 times. Started with $3K in Cell tokens to get $750. And Cell token dropped to about this $1K value, because it dropped to about $1, at which point I needed to satisfy that $750. But it kept dropping. It probably got to about $800 in value at the lowest, which is when it triggered the automatic liquidation. So I sold what was initially $3,000 worth of Cell tokens for $750, and then I got just a chunk of this back that wasn't needed to satisfy my initial loan value. So I basically sold total about 2.5, maybe $7.5 or $8,000 of Cell tokens for $1,800. So because of this event, I secured about $6,000 in losses on my Cell tokens, and now they're just gone. And obviously this sucks so bad, but again, I think this was something I needed to experience, especially before things got even worse in the market, which who knows if they're going to, but that's something I'm going to prepare for, again, moving forward, which I will discuss in a few minutes. So I was able to save one of my loans. It was only $100 of loan value, so I just paid that back real quick and saved myself a few Cell tokens before this loan got liquidated as well. But this shocked me into realizing that this market can do anything. I thought 25% LTV was a safe level, but especially when you start considering altcoins as collateral, really anything can happen. And that's the risk you take when doing these loans and using them to invest further. So obviously one of the solutions here would be to not take out so many loans that I have no collateral to continue adding when something goes wrong, which I didn't do. I basically locked up all of my assets in Celsius in loans, which meant when those margin calls happened, I had nothing to immediately supply for extra collateral, which meant I was forced to add more funds into crypto, into these apps, in order to pay back these loans and save myself from liquidation, which I just couldn't do fast enough before the price dropped and liquidated me. But again, luckily these Celsius tokens were a smaller portion of my portfolio. Most of my assets are in Bitcoin, and again, locked up in these loans on Celsius. So then I started looking at the Bitcoin loans I had out, especially as Bitcoin was dropping from 35,000 to about 26, 27,000. And seeing these margin call levels really got me scared, especially knowing how quickly liquidation can happen if you're not immediately prepared, or even if you are prepared and the price just drops too quickly. And the loan I'm really fearful of right now is this $3,000 loan I took out against Bitcoin. And the price must have been around 44,000 or so. And my margin call is at $22,378 Bitcoin price. So the other day when we dropped to about, let's see how close this was. I mean, we hit 26,600, which is only $4,000 off. And when Bitcoin has already dropped 40, 50, 60% off of its all-time highs, who's to say it can't drop another 15, 20% from here and trigger this margin call for me? And the last thing I want to do is sell my Bitcoin. That is the number one thing I am focusing on, is accumulating more Bitcoin. So that is a risk I do not want to take. And again, this was a wake-up call for me to take a closer look at my loans and figure out how to prevent this moving forward, which again, I will talk about here in a minute. So that was mistake number one. Mistake number two is just getting too greedy, which is kind of what fueled my decisions to take out these loans and use them to invest in more crypto instead of doing something a little more responsible with them, or maybe just not taking them out at all. So pretty much my thought on these loans was that I'm only earning 5 or 6% yield on these assets in Celsius. If I take out a loan, I could earn much more than that in DeFi to make up for the cost of borrowing these loans, as well as make a little extra money on the side. And as you guys know, most of these funds went into SifChain because I was earning 100, 200, 300% APR on these assets, which is just more than paying for the cost of these loans. But that's where the greed started to get me in trouble. Again, considering the market movements we've seen lately, it's just a big reminder that altcoins are going to be much more volatile than Bitcoin in the event of these big market moves to the downside, which is not good for a leveraged strategy like mine. In this case, I fell into the problem of chasing these high APRs because I thought it would just give me the highest returns, which I did with Juno a couple weeks ago. And then I started to realize maybe that was a little risky. And then again, literally like a week before this Luna meltdown happened, I started looking into Luna and I thought it was a really cool idea. Again, it had like 230, 240% APR on SifChain. I was like, great, that's a great opportunity to earn a ton of income off of an asset that I find appealing. And same with Atom here. I mean, I like Atom still, but high APR, I thought it was going to be a great idea. But Atom still got hit just as hard as everything else when Bitcoin comes crashing down. And this is a really dangerous mindset that I've fallen into because I know with pretty high confidence that Bitcoin will be an increasing asset for the next several years. But I can't say that with the same level of confidence for many of these altcoins. But it's so easy to get sucked into these high APR rates and view them as a way of rapidly increasing your wealth instead of falling back on those safer, more reliable methods, such as just dollar cost averaging into Bitcoin for a long time. And even beyond crypto, this is something I struggle with, as viewing investing as a way to get rich instead of investing as a safe way to compound your wealth over time. Because when you view investing as a strategy to get rich, I feel like you pressure yourself into making riskier decisions that you think will have a higher payoff. But in most cases, that isn't going to work out, and you're not going to do as well as somebody who takes the safer route and just relies on those consistent investing and safer returns over a long period to get rich. And when you combine this with leverage or borrowing against your assets to buy more crypto, that gets even more dangerous, because then when things go south like it does, you end up losing even more than you would have if you just held those assets outright. Obviously, I wish I just held my CEL tokens, held my Bitcoin, not taken out any loans, because I would have been in a much safer position right now. I wouldn't have just lost all of these CEL tokens. And I wouldn't be in a spot where I have to now figure out what I'm going to do with my Bitcoin just in case things get worse. So this was just an important lesson for me to learn about greed and investing, especially when leverage is involved, that I need to now dial back on some of these riskier strategies. I'm still going to keep some money in SifChain. I love SifChain. I still have a positive outlook on the Rowan token and everything they're building. And you can't deny these APR rates. I just wish I had taken a more responsible approach to them. So now my priority is just going to be de-risking, de-leveraging my portfolio specifically, and restoring my focus on just accumulating Bitcoin, because that, I think, is the safest bet I could possibly make in crypto. And even at these prices, I think these returns are going to be phenomenal over the next several years. So there's no need for me to get greedy and try to find even more somewhere else when I know this is probably going to work out just fine. So as I said, now I'm focusing on fixing these issues and prepping myself for further pain in the markets, which I think could be coming. Now, I'm not a technical analysis kind of guy, but this just doesn't feel like the pain is over yet for the market, especially the more I turn to people who I know are smarter than myself. If you want some more perspective on where I'm getting my opinion about this, first, I would recommend CTO Larson on YouTube. He does some really accurate technical analysis. And I'm not really a huge TA guy, but He's back tested his methods for I think like 6 or 7 or 8 years. And they've all been very effective at predicting the best times to enter and exit Bitcoin. So I trust him when he says, he's not quite ready yet to get back in. And this is a great video about, is now the time to enter after this recent crash. Another great video I saw was Benjamin Cohen, and he's kind of looking at what is the worst case of Bitcoin. This is something I was kind of trying to figure out for myself when addressing, my Bitcoin loans. How much do I need to expect Bitcoin price to drop? What should I be preparing for? And in this video in particular, he compares the current Bitcoin market to the .com bubble, which experienced about an 80% drop. And the Bitcoin charts are looking quite a bit like that right now. I forget where it is in this video, but he basically suggests that the crypto market could fall from its current point of about like $1.5 trillion to about $600 or $700 billion, which would put the Bitcoin price around like $20,000. And again, that's right in that sweet spot underneath my margin call levels where I would have to take action on my loans. Again, maybe it doesn't happen, but as we've seen the past couple of weeks, I think anything is possible in the crypto market, and I need to be preparing for those worst case scenarios. And this is a great video as well, an interview with James at Invest Answers and Alex Mashinsky, CEO of Celsius Network, kind of discussing the current market. And they have a little more positive outlook than Benjamin Cohen did with the absolute worst case scenario. But still, they think that the pain is not really over. Might trade sideways, might trade down a little bit, especially if inflation continues to slow as it has been, or it doesn't decrease as fast as we would like it to. Probably not going to be great for markets. So with all this in mind, I'm taking a look again at my Bitcoin loans, and I'm going, okay, this first one has a margin call at $22,000. I need to address that ASAP. So my plan really is to first pay off this $3,000 loan. It's my biggest loan with the highest margin call level. So by paying off this loan, I should free up more than enough Bitcoin to cover my other loans in the event that they get margin called, which are all at lower levels. So I think that is less likely, but at least this will give me more collateral to add in the case that I do need to do it. And then on top of that, I'm just going to keep buying more Bitcoin in this market. I really don't have faith that altcoins are going to outperform Bitcoin in the near term. So my strategy will just be continue to accumulate even more Bitcoin, which should just give me even more buffer for these loans in the case that they do get margin called. So I'm going to just keep buying Bitcoin, moving them over to Celsius, and just having them ready in the worst case scenario that they get margin called, and I need to add collateral very quickly. And unfortunately, that means pulling out some of my assets from SIFChain at a loss. I think you guys saw my last video. I put about $1,000 in Luna, so that's wiped out now. But I do still want to keep some in here, but I'm going to pull out enough to pay off this $3,000 loan, free up more collateral, and then keep some stuff earning in here while I can. But again, just trying to take some risk out of my portfolio. I don't want to be margin called. I don't want to be liquidated again. So that's what I'm doing. And beyond that, I'm sure you guys are experiencing this too, but just the crushing feeling of looking at your portfolio these days when it's down so much, after I've been so aggressively adding to crypto over the past couple months, it's not fun. So I'm just trying to take this opportunity to zoom out and really look at what's going on and going, this is a once in every 3 or 4 years opportunity here to double down on what I believe in with Bitcoin, maybe other assets if you like other assets too. And not stress so much about the day-to-day movements. Again, that's the point of me taking the risk out of my portfolio. I don't have to worry if Bitcoin keeps going down. I can trust that I'm going to be protected with my loans, which I will probably not take out in the future, except for maybe extreme cases. So I'm really just focused right now on how I can make more money outside of crypto instead of worrying about my portfolio. So that way I can just keep earning, not worry about what my portfolio is doing, continue buying Bitcoin while the prices are low in the coming weeks or months. Because I think that's what's going to pay off in the future. So again, it kind of flips this thing of I'm not investing to get rich. I'm going to work to get rich, and then I'm going to put that money away into assets that I think are going to compound and appreciate over the long term, like Bitcoin. So that's kind of my perspective here over the past week or so, watching the markets kind of melt down. Hopefully some of this was helpful for you guys. Please be careful with your loans if you have them. I'm still going to keep the videos coming when I can, as long as I find something I think is worth covering. So if you guys have any requests or anything, please leave them in the comments below. But otherwise, check out this video for something to watch next, and I will see you next time.